Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. In this packed program, I'm going to have a look at quite a number of indicators to give us an overall bigger picture of what's happening with Bitcoin in the short, medium and long term. The big question on everyone's lips right now is, have we bottomed out? Are we on our way back up? Or are we going to crash to newer levels? I'll be unpicking quite a number of the indicators to have a look at exactly what they're saying in the short, medium and the long term. So if that sounds interesting, then get your Snickers bars in your left hand, cup of tea in the right hand, eyes on the screen, and let's get cracking. I'm going to start off with the chart that nobody has even looked at the moment, and that is the unbalanced volume for Bitcoin on the weekly chart. And it's telling us something very interesting, and that is that if you look at the price here, it's very difficult to see because of the way the candles are, whether there's a divergence or not. And the divergences are very, very powerful, and I can show you this very clearly with this unbalanced volume. When we can't see a clear divergence, what we need to do is to go to the candles and turn that into the line chart. And then you can see quite clearly exactly where we are. Back in March and April, what we saw with this pattern here was that we made a higher high here. Back in March, April this year, while we were making a higher high here on the price chart, what we were doing was making a lower high on the unbalanced volume. So there was a clear divergence on the unbalanced volume. If you look at the RSI, also very similar picture. While we made a higher high here, on the RSI we made a lower high here. So again, a very powerful divergence on the weekly chart. So always remember, the larger the time frame, the more powerful the move and the more weight there is. These two, the RSI and the unbalanced volume, were showing us a different picture that we are about to top off around here. Now, the interesting thing with the unbalanced volume, now the situation seems to have reversed. So while in the price here, we're seeing a lower high, we're seeing a higher high here in the unbalanced volume. So this would suggest, just by looking at the unbalanced volume, and always remember, one indicator doesn't move the market. It gives us a picture, an insight into what could possibly be brewing in the background of all the other things that are going on. So unbalanced volume is a very powerful indicator because this is a tally of all the volume, all the demand and supply that's going on with Bitcoin. And this is telling us that there is underlying strength in the market. So it could very well be that we're bottoming out at these levels at the moment. That doesn't mean it can't go lower. It just means that we're at or very close to the bottoming out process in this move here. On the RSI, we're not making a similar move yet. So while there is a lower low here on the price, we've also got a lower low on the RSI. So we may have a few more weeks. And could it be that we're going to drop below the 30 mark here? It's only when we get to below the 30 that the market is really oversold. And then we can make a divergence around here and before we start moving to the upside. So while the unbalanced volume would suggest that we've turned the corner, the RSI is slightly lagging behind. So we must keep a balanced view on this. Okay, something interesting when we look at the TD sequentials of the current candles on the weekly chart, and that is that if you know anything about the TD sequential, when we get a full flush of the 9 here, we tend to always have a correction. Similarly, when we get a series of consecutive red numbers culminating in the 9, it gives us the clue that the market is now bottoming out and that we're about to start an uptrend. Now, the interesting thing here is that we've come to a red 9 here after which you would expect the market to start moving to the upside. And this is exactly what we did with the green one here. However, the market currently this week, this is the weekly chart, this week, we're still on a red one. It means that the market is resetting to the downside. So what happens is after a 9, if the trend is still downwards, we may get a bounce to the upside to reset the TD sequential to a green one, and then we can then go for another series of red numbers towards the bottom side. Now this would currently suggest that with a red one here, that the market is in a bit of a bear phase and we're going down to the downside. However, while we had a fall on Friday and Saturday, we seem to have recovered in the last 24 hours, pushing this candle up to these levels. We've been as high as 33,500 today. To reset the red one to a green 2, to follow on from this green one here, we would need to close above the 4th candle prior to this one here. So 1, 2, 3, 4. So the close on this one was around about 35,600, 35,700. And if we could get this candle to close at that price or higher, what would happen would be to create a dragonfly doji. And a dragonfly doji on a weekly chart would be very powerful and enough to move the markets to the upside. And what I mean by that is that if the price is moved to these levels here at 35,600, 35,700, what we would get on this candle would be a pattern like this. So what this would represent is a rejection of lower prices. And the fact that the price has been so far down and during the week has been pushed all the way back to the opening price would send a very powerful message to the market that we're about to turn to the upside. Because usually you see these types of patterns, a dragonfly doji at the bottom of a trend. And the reverse of that, sometimes you get a little bit of a wick on either side, so you could have a wick there, but here we won't get that wick unless it goes up a bit there and comes back down again. And an example of this one here, which really moved the market, was back in June 2019. Look what happened here. This gravestone doji, when it's this way around, it's the gravestone doji. You can call it whatever you want to, actually, to be honest with you. But when you get a candle like this, it has the power to move the price to the opposite direction from where it's coming from. So usually you see these at the top of the trends, and you see these at the bottom of a trend. So if we could get by the end of tonight, Sunday night, when this will close above the 35,000 mark, what we will create is a powerful candle that will move the market to the upside. So only time will tell. Keep a lookout for that. Keep your eye on this. And certainly it would turn the red 1 to a green 2, and that would mark a very powerful signal to the market that we're on our way to the upside. If we have a look at the daily chart, something again very, very interesting. A few people on the YouTube community have mentioned this. What we've now got here is what is termed as the 3 white soldiers, which is 3 green candles on the daily chart, which usually you find at the bottom of a trend. Now, here we've had obviously this trend all the way down from the $64,000. And what have we got? We've got these 3 white soldiers. Firstly, this is not a classical 3 white soldiers candlestick pattern, simply because usually you don't find long wicks on the 3 white soldiers. Here we have got quite a large wicks on all 3 of them. So that just makes it a bit weaker. And secondly, the third candle here should normally, as part of the characteristics of a three white soldiers classical pattern, would be a bigger body than the second candle here. And in this case, we've got a smaller body in comparison to the second candle here. So it's not an ideal three white soldiers pattern. However, we do have three green candles at the bottom of a large trend. So it may well be enough to turn the market, but certainly it's a sign that things are beginning to move at least. And what we've got currently here is that we're on a second candle again. So if we got another third one here, whose body was bigger than the second candle, which is, this is today's candle, so this could get bigger still. If we could get another series of three white soldiers, as they're called, then again, that would send a powerful signal to the market. So it may not be ideal with the candlestick pattern developing. However, these may be tentative signs that the market is beginning to bottom out here. Moving on to the BLX chart, this is currently my favorite chart because what we've got is the whole of the price encapsulated within these three trend lines here. And it gives us a very good overall picture for the next few months and possibly the next few years if you go further on from here. And that is that while we got rejected here at this point back in June 2019, when we topped out at the 14,000 level, we've come back to this resistant point here. And because we've now come back to this the third time, that allows us to give a very long-term trend line here. And now we're coming to the fourth touch point. Now, according to this line, it may well be that we've got a little bit more further to go down to the downside, around the $23,000, $24,000 mark. Only time will tell. It doesn't have to come back down to those levels, but certainly I wouldn't expect the market to go anywhere below this, because this trend line would tell you that if it's to hold the support here, then the lowest point it would be able to go down to would be around about the 23, 24 mark here. And it really depends on where you want to draw this trend line. Because it's a large trend line, just a little movement can make a big difference here. So if you move that slightly further up to take into account the bodies of the candles over here, there, then this would suggest that we've already bottomed out here, and this may well be the springboard for the next move to the upside. But certainly we need to keep an eye on this, and if anybody was looking to get into the market, the equation that we have to always take into account is this, because many people keep asking me, oh, is it a good time to buy, or should we wait until the market goes further down? Well, just look at this picture and it will give you the answer. First of all, how far do we have to fall at this point here? Possibly to the 23, 24,000, as I've just said. Now the current price is around the 32, 33,000 mark today. So that means it may well be about 9,000, 10,000, let's say even at the very, very tops. So it may have a 8, 9, 10,000 drop possibility at the worst case scenario. However, look at the upside potential. And would you want to risk market from turning around from where we are on the upward trajectory? Because once it starts moving up, it just leaves people behind, and everybody's waiting for it to come back down for another correction, but then it doesn't. And we saw that here back in October, when everybody was expecting, including myself, that the market would come back down from the $13,000 mark. Instead, it just barged all the way through to the 20, 21, 23,000 in very short time, with hardly any corrections in between, before moving on further to the $64,000 top off that we've just had. So that's the risk you take. It's always very difficult to time the market, i.e. to be able to buy at the very, very bottom and to sell out at the very, very top. And what we've got to do is we've got to get the middle 60 or 70% of the move. And at these current prices, I would suggest, and certainly I've been nibbling away at these prices, and this way your dollar cost averaging your positions, so when the big move comes, you're not going to get left behind, and you'll then catch that 60-70% of the rise. So these are the bullish cases for Bitcoin from what I can see in the charts with the various indicators. We can have a look at the bearish case as well, because the bearish case is also quite overwhelming. Firstly, if we have a look at the weekly chart and the 21 weekly exponential moving average, we mentioned this many times in the previous videos, and that is that it has been totally unprecedented that in a bull market that we've had so many weekly candles below this weekly exponential moving average. So we've now closed 5 candles below the 21 weekly exponential moving average, and this one is the 6th one here, and this looks very highly likely that we're going to close below the 21 weekly exponential moving average here. Now, in the past, in all the bull markets, we've never ever had that, and you can see that just from the previous bull market in 2017-18. As you can see, the yellow line here, we protruded it a few times, but we've never really closed below it here, although we have closed once in the previous cycle, which I've shown you before. But certainly we've never had 5 or 6 weeks consecutive closes below this line. So this is quite a bearish sign, and would suggest that we are very much in the bearish phase here. And it usually is a sign that once we fall below this, that is the sign that we're in the bear market. So will it be like this, or is this a one-off where we turn around back to the upside? Only time will tell, and we need to look at a lot more factors that would determine the bigger picture. There is no one indicator that you can actually say that that is the sign that we are now going up or down. All of them provide a contribution to the overall narrative, and it's never ever a case of everything is bullish or everything is bearish. There is always a mixture of bullish and bearish factors, and as technical analysts we have to basically weigh up the pros and the cons, the ups and the downs, the bearish and the bullish, and then come to some sort of a judgment, and that's what the market is. There are no guarantees or certainties, and the only certainty is the uncertainty in the market. So certainly the 21 weekly exponential moving average here would suggest a bearish scenario here. The next bearish case there is in the charts, which a lot of people have been talking about, and I mentioned this in the last video, is that we're having a death cross. The death cross is the 50 daily moving average, which is the white line here, which crosses below the slower moving 200 daily moving average here. And as soon as we get the death cross here, you can notice one thing, that the price has already fallen by quite a bit anyway before this cross occurs. So this in itself isn't an indicator that it's going to fall further. It's just a sign to say that we have fallen to the extent where this has crossed, and this usually is seen as a bearish sign. But certainly it's not an indicator you would be trading on, because you would have missed this move down here before it even crossed over here. It's really confirming the bearish phase rather than predicting that we're going to go much further down. And it may well be the catalyst and a sign that we're going to be moving up rather than to the downside. And the fact that we are below the 200 daily moving average is obviously telling us that we're in the bearish phase. It's confirming that we're on a downtrend. So that's still bearish. And until we move above the 200 moving average at this price here at 43,000, and this is quite a critical level actually when you look at it, because when we zoom out, this is the point at which we need to get to before we turn the trend around, to turn it from the bearish trend into the bullish trend. Why do I say that? Well, have a look at this. I've mentioned for many weeks that the critical level, when everybody was talking about it turning around here, I said at the time, many videos ago, that this is on the table, this level here. And what this is doing is encapsulating these points, this strong rejection at that point, and this strong bounce at this point here. So that's 42 and 43,000. So this is the actual resistant point that we need to get to. Once we clear this area here, we're good to go. Until we get to this point, we're going to be in this sideways pattern here. What we're actually forming here are two actual very distinct phases here. So what you've got is at this point, at the 42, 43,000, where I said a few videos back that this is definitely on the table when nobody was talking about the 42, 43,000. If you draw a line across there, take it to the top of the 64,000, this was one phase of sideways action at the top. Once we fell out at this point here, this created the second phase, where we've now been going sideways on here. Should there be a third phase, and I'm not saying that there is going to be a third phase, but certainly it's definitely on the table. There may be a small probability, maybe 20%, 30%, but certainly it's on the table, because if we fell below this, how far could we go? Well, the way to measure that would be to measure this first and see what the second phase was. If you take the measurement from the top of the 64,000 to the point where we fell down from the first phase, that was around 35%. Now, if you take from the second phase, the top to the bottom, it was around 31%. So certainly, if we look at where the market could actually possibly fall down to, based on just this scenario being painted here, the next logical step would be here, where there's a lot of price movement. And the reason why we know this is very important is if we put the VPVR on here, you can see that from where we are now here, if we move this to the left here, you can see how the VPR tells us where the support and the resistance points are. These levels sticking out are these points here. And after this, there's very little support here. So we're not going to get support until we get to these high volume candles here. And this is basically where we are there. And this level up to here, up to this level here, would take us from this level to there about 28–30% fall down to the 20,000 level. So certainly that is on the table whether we like it or not. Am I expecting that? Not really. Maybe even 20% might be too much of a percentage on the probability side. But certainly it is on the table. If something unprecedented happened, let's say like a Dow Jones index crash, then that is definitely on the table with a very high degree of probability. So we must keep an eye on this. My own inclination is that we're bottoming out here, as I've said in the last few videos. This to me looks like a bottoming out pattern here with the other indicators that I've shown you. When we weigh up all those indicators, it seems to me as though we've now coming to the point where we're going to be creating some sort of a W pattern here before we move to the upside. And if we have a look at the Dow Jones Industrial Average, since the COVID situation here and there, I mean, look how closely the Bitcoin, this is the Bitcoin, and we've just had a crash here. And this is the Dow Jones Industrial Index. And we've had a fall there, but it's now having a recovery, as you can see, on the Dow Jones side. So is this telling us that we're about to have a little recovery here as well? Only time will tell, but certainly this shows quite clearly that the Dow Jones Industrial Average and the Bitcoin are mirroring each other. to the top. So should we have a crash in the Dow Jones Industrial Average, it'll certainly bring the Bitcoin price down to levels that we don't even want to even think about. So we must keep our eye on the Dow Jones as well. Very, very important. And if we have a comparison of Bitcoin with the dollar, and we know that the dollar has an inverse relationship, quite the reverse, with the Dow Jones Index and Bitcoin. So as we know from the COVID situation, while we fell here, the dollar rose here. And since then, while the Bitcoin's been going up with the Dow Jones Index, the dollar has been falling down here. And while we've just had a correction to the downside with Bitcoin around here, the dollar has been going up to the upside. So again, we need to keep an eye on the dollar as well. If the dollar starts to surge up, we can certainly expect the Bitcoin to be going to the downside and vice versa. But if you look at the dollar here, this could be giving us a clue as to where Bitcoin might go, because certainly we've been rejected here, and now we've come to this trend line and being rejected again. Now we're at a critical juncture with the dollar. Should we get rejected here, which is hovering around there to the downside, that would mean that the Bitcoin would be going to the upside. But should we break this neckline here for the dollar to the upside, then it may well be that we go to the downside here. So again, very, very critical moment that we're in the next week or so. It's always important to have a look at the EMA ribbons, because in different time frames they tell us we're in a different type of a market. So for instance, here on the daily chart, you can see quite clearly that we are in a downtrend. Once we fell out of these ribbons here, as you can see, we were riding these ribbons all the way up until we fell out here. We made an attempt to get back onto the rally, but certainly since we fell out at this point, we have been in a downtrend. So this would suggest we're still in a downtrend on the daily chart. However, if we look at the weekly chart, we can see that since we broke out from these weekly exponential moving averages here, back in April, after the COVID situation here, that we've been in an uptrend ever since. And right up to now, we're still finding support on the last EMA ribbon here. So this would suggest that we've never been on a downtrend and that we've still been on the uptrend even now and finding support on this last ribbon here. So could this be a sign that this support is the last support that we're going to have before we move to the upside on here? But certainly very interesting to have a look at the EMA ribbons on the different time frames. The final thing I want to look on Bitcoin, just to give you the overall bigger picture, is the Fibonacci retracement levels. Because as we found with the 64,000, I said at the time that if you do the Fibonacci retracement, to look out for this level here. I mentioned this many times before we reached the 64,000. I mentioned at the time many times that we're coming up to a 61.8 level, which is at $64,000 here. And this could be a very important resistance point. What no one could tell us anything, and it certainly took me by surprise, was the fact the depth of the correction that was to be followed from this level here. So we can always predict the price at which the resistance will come, but we can never predict the depth of the correction that's to follow. And certainly this took us all by surprise here. But if this was the case, then where have we come back to? Look at this level here. We've come back to this 1.61.8 at the 30,000 level. The above correction at the 2.61.8 was here. But certainly below that, we're not expecting this price to get to here. So this 61.8 level could well be the bottom, according to the Fibonacci retracement, which predicted this big move up to 64,000. And we know from looking at the Fibonacci retracements many times in the previous videos, how important and critical this is and how accurate this is. So again, this is painting a picture that at these current levels that we've just bottomed out at the 30,000 level, they may well prove to be the bottoming price here. Quick look at the Bitcoin miners. The one that we normally look at is the Marathon Digital Holdings here. And I've been mentioning in the last few videos this critical neckline that we've been developing here. When we broke this neckline here around the February time, this happened. We had a massive rise to the upside by around about 80%. And in the last few videos, I've been showing you that we're coming to this neckline again. When we were over here, I said that once we clear this, we could well be on our way here. Certainly, once we did clear this, we came back to retest this as support, and we're still hovering around here, presenting wonderful opportunities for the market to go much higher once the Bitcoin starts to take an upward trajectory. And a similar picture was developing with the Riot blockchain here. Once we crossed this neckline here, it too went on a big run here, which is a clue as to what it would do over here. Certainly we crossed it at this point, but look where we've come to. We've come back to the same neckline as support, and we're just on our way now here. Is this a clue that we're going to be going to the upside very shortly? Only time will tell, but certainly these necklines are extremely important, and my experience of them is that these are the greatest opportunities for actually investing. And if you can get in at these levels here, you will be able to run up to these levels and get the rewards. And you can buy Marathon and Riot in the Etoro exchange, which is the exchange I use to buy Riot and Marathon and many of the other altcoins, as well as the other cryptocurrencies like Bitcoin and Ethereum. If you want to open an account with Etoro, at the bottom of all my videos, you'll see that there is an affiliate link that I have. I have a partnership with Etoro. And if you click on this link here, you'll be able to open an account very simply by creating this account on the right-hand side here. And then you'll have access to Marathon and Riot and Bitcoin, Ethereum, and many of the other altcoins like Neo and Zcash, etc. At the same time, you'd be actually supporting the channel here as well. And if you want to support the channel, you could always click the like button here and click the subscribe button here for Wisdom Bites. And can I take this opportunity to thank everyone who has actually signed up to the Etoro accounts and supported this channel. Thank you very much indeed. Your support is very much appreciated. And in today's Wisdom Bite, I just want to share a very simple and short message. And that is, a negative mind will never give you a positive life. Whatever's happened to you in the past should not dictate what happens to you in the future. And if you observe yourself and come to the conclusion that you have a negative mind, then that is 50% of correcting yourself to lead a positive life in the future. Ask yourself this question: what has a negative mind got you up to now? And wherever it's got you, you can see that in the next 5 years, 10 years, this is exactly what it'll give you in that period of time. You can see quite clearly that a negative mind gets you to where you are today, and in the next 5 to 10 years, it's not going to get you much further than that. So we all owe it to ourselves to give ourselves the chance, the opportunity to have a more positive life by changing our mindset from a negative mindset to a positive mindset. So I hope you'll ponder on this. Please be honest with yourself and say, do I have a negative mind? Because by pondering and observing our own behaviors, can we come to the conclusion that answers a question that we all should be asking? And that is, are we an asset or a liability to ourselves? And if you have a negative mindset, well, guess what? You're definitely a liability to yourself. And if you don't want to be a liability to yourself, then you have to change this negative mindset to a positive one, because certainly a positive life will never follow from a negative mindset. That's all I want to say for today. A nice short and sharp message. I hope you've enjoyed the video and liked the analysis, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.